lower price are moving and, doubling and tripling in a matter of weeks. And historically, that has always happened at the end of a bull run and all. So it is concerning, and it's interesting that normally you would have expected, with the stock market remaining strong, that gold would not be able to hold the huge gains that it made. I think that's another credit you just got to give the gold, that in all of this, it's hanging here. And I think it's hanging here because it realizes chances are that's not going to last in the stocks, and eventually a serious correction, if not a bear market, will entail. And as long as it's not a collapse, because remember, in a collapse, people think of liquidity. They're not talking the stories about gold and BRICS or anything. I need to sell something in order to get my house in order, and gold could be sold then. But other than that, the stock market peaking and rolling over will be just another bullish factor for gold. You put it in a nice way, because I used to simply say that silver was like kissing your sister. But when it broke under 30 earlier this year, and then I look at the tremendous, clearly minimum short position, whether it's manipulated short or just people who don't believe it's going higher than that, and the industrial use, and then the ratio got so out of whack with gold that I became a silver bug. And I said, quite frankly, it could lead gold for a while. So I still see them as, close in terms of favorability. There's no dramatic difference, as I used to see, always putting gold ahead of silver. I think silver will not be able to rally a lot without gold going up, and that could cause it to drag up. I do think gold has traded just admirably. Now, remember when it got near 3,500, I said I actually took profits in it because I thought it ran far, and it got something that almost always is a surefire signal. The percentage above its 200-day moving average was at a record high. And I felt that suggested that it's going to either take time for the at average to catch up, or gold was going to have to go down a lot, maybe as far as 3,000, because the 200-day moving average at time was 2,700 and change. It's now over 3,000, that 200-day moving average. And in a couple more weeks, it'll move up even faster, because some of the higher prices of gold will impact that average now. So I'm okay if we go through, and I know traders don't want to hear this, but if we went through Labor Day and we were still talking about gold on either side of 3,300, I'm fine, because if you're a 4,000 or 5,000 or even higher believer, the longer we consolidate here and that averages get and overbought and this get worked out and things of that nature, the better foundation it will be to get to those numbers. So I would say that I'm well content about the gold price. Obviously, breaking through this resistance on silver was important. I thought it had another great day today. It was dragged down earlier this morning with some significant gold selling, popped right back up. I think shorts, if they are what many people think that are out there, they got a huge problem. They won't be able to wait too much longer, and it may take a psychological number being broken, which would be 40. It's just a round number, but it would be psychological. And we could see that ultimate squeeze that a lot of people have felt all along. But constructively, gold and silver still look like they want to go a lot higher. And there doesn't seem to be any real concerns of major downside other than, 5 to 10%, pullbacks.
Gold has held strong, hovering above $3,300 and refusing to crack despite market pressures. Earlier this year, a surge pushed it well above its 200-day moving average, suggesting an overheated rally. But rather than correcting harshly, gold has entered a healthy consolidation phase. As that average climbs closer to the current price, a stronger foundation is forming. For long-term bulls, targeting $4,000 or even $5,000, this pause is a gift. Gold's ability to hold ground while stocks rally is a testament to its strength. It's not just about chasing price, it's about preparing for a sustainable breakout later.
Well, I don't always know if institutions are called smart money, because several Nobel laureates did studies over the last couple of decades and found that 80% of active money managers underperform the simple performance of the S&P 500. So we may give too much credit to the average institutional person, but you are right that institutionals are significant major net sellers of general equities and now corporate insiders as well. And it's the general public that is reaching levels not seen in years, if not ever, on how much its own ownership of stocks. And of course, the lower echelon of stocks, lower price, are moving and doubling and tripling in a matter of weeks. And historically, that has always happened at the end of a bull run and all. So it is concerning, and it's interesting that normally you would have expected, with the stock market remaining strong, that gold would not be able to hold the huge gains that it made. I think that's another credit you just got to give the gold, that in all of this, it's hanging here. And I think it's hanging here because it realizes chances are that's not going to last in the stocks. And eventually a serious correction, if not a bear market, will entail. And as long as it's not a collapse, because remember, in a collapse, people think of liquidity. They're not talking the stories about gold and BRICS or anything. I need to sell something in order to get my house in order. And, gold could be sold then. But other than that, the stock market peaking and rolling over will be just another bullish factor for gold.
Silver's performance is becoming increasingly bullish, especially as it resists dips caused by gold sell-offs. This resilience is pressuring short sellers, many of whom are now facing serious losses. If silver breaches the psychological resistance at $40, we could see a massive short squeeze that sends prices skyrocketing. There's limited downside risk. Analysts see only modest pullbacks of 5 to 10%. The strength in both metals is notable given the robust stock market. Historically, gold weakens in such environments, but not this time. Silver is showing leadership potential, and if gold joins the move, we could witness a dual surge unlike anything seen in years.
So for a lot of years, especially when I was a fund manager, platinum always traded at a premium of gold. That's why it was a platinum card was better than a gold card. Amex, now, of course, from that respect, that changed. I don't look at platinum like I once did 20 or so years ago, so I wouldn't be a good expert on it, other than I think what people realized is it got so cheap compared to gold and palladium. When silver shot up that day on its record day up, palladium actually went up more percentage that day than even silver. So I think they're making up for a loss, but I don't follow it well enough. It was always a metal that really was only come out of 2 or 3 places. Many of most of those places people were concerned about, especially now from South Africa and of course Russia. There may be some concern about supply demand. I don't know. The big driver that used to be was the Cadillac converters in cars. I'm not a good person, Elijah, to say other than I think that it's just part of the whole metals complex moving higher.
Despite the illusion that institutions know best, research shows that 80% of active money managers underperform simple index strategies. Today, institutions and corporate insiders are net sellers of equities, while retail investors are buying up risky low-price stocks, many of which are doubling or tripling in weeks. That's a red flag. This retail frenzy has historically marked the end of bull markets, yet gold continues to hold firm, signaling that smart investors are already positioning for a turn. The disconnect between gold's strength and equities' euphoria suggests that a correction is likely near, and precious metals may be the refuge.
This is where I get a lot of the MAGA people angry. I'm not a MAGA person, but I'm not a Trump hater either. I live with a Trump lover. If he comes on, she'll run in and watch him on TV and not even think about what she was speaking to me, my wife. But I do think he's made a serious misjudgment. And first of all, he's done some really good things. The immigration thing, another 4 years of how it was, the country would have been totally ruined. Not that it's not going to be eventually, but he at least curtailed that end. He's brought some sanity back to things. He's taking money away from places that were extremely biased, like, this NPR stuff and all. But on the trade war, my comment is simple. He brought a big stick to it when he should have brought an olive branch. America is not the power that it was 30 or 40 or 50 years ago. And you can say all you want about make America great again and all, but it's not the country it was. It's not received in the manner that it was 30 or 40 years ago. The BRICS would have never gotten off the ground and continue to grow if it was where everybody wanted to deal with it and all. China is an extremely formidable opponent. I put out a video a couple of nights ago just demonstrating why I think that's true. And so I think he made an error. Now, he still has the momentum from his election and the group and stock market. The don't worry, be happy crowd that make up much of the financial service industry. I like to joke that you can throw them off the Empire State Building all the way down. They'll all say, hey, so far, so good. They'll like anybody and anything that makes the stock market go up. So they're all for, and supporting this stuff and all. But I will tell you this. I think it's going to come back to bite America in a very big way. And one of the things that's showing up now is, and he's given this name of taco and, that Trump, says one thing and then he switches. I don't think he has that much more time until he gets to the point of, hey, they didn't come running to our feet. Elijah, I would just tell your viewers, just go and watch what he was saying weeks before his coronation and then during the coronation and inauguration and up to April 2nd, what he predicted that the world was going to do. They haven't done it. They haven't come running to make deals.
Platinum once commanded respect as the elite metal, often priced above gold. But times have changed. With key suppliers in South Africa and Russia facing uncertainty and diminished industrial use in catalytic converters, platinum has lost its edge. Meanwhile, global politics are shifting. Trump's aggressive trade posture may have made headlines, but his missteps with China and other powers are eroding American influence. BRICS is expanding quietly, appealing to countries disillusioned by U.S. dominance. The metals market reflects this geopolitical undercurrent. As Western power fractures, gold and silver gain strength, not just as commodities, but as political hedges.
In fact, there's nothing of major significance as we approach already now past the middle of July. I think what will transpire is he will take a lot off, settle on a much lower number, and still say that's really good for us. We know we're the greatest country, and all this other type of stuff and all. Because he cannot point to anything at this point in time, and it's been pushed. Remember, it was going to be July, and now it's August. And who knows, come August 1st, they'll push it again and say, well, we're going to give you to X, Y, Z. But I think it's a net negative long term, and the positives from it and the spin that they're getting out of it is going to deteriorate. And one of the ways it's going to deteriorate is he's losing some support from other issues. The Powell issue, one much bigger than that is the Epstein issue. There are a lot of people who are major supporters, including that woman that sits in that other room, who were hoping that this Epstein thing was going to come to the forefront, which it seemed like him and his group said was going to transpire. Dan Bongiorno was probably the most aggressive guy in the media about Epstein joins the FBI. Everybody assumes it's all going to hit the fan. And we all know what's transpired. I think he's losing some of the political chips, and here's why I believe that's important. Our election now, a few months away from November, as soon as this election is over, they'll focus everything on the congressional election in November 2026. And guys that were Republicans or supporters of MAGA who might have stood right next to him may not stand as close or even stand there at all. So his time is running short to really prove that this is the formula and the way to go. Talk is going to get cheap eventually, and eventually that'll show up in the stock market as well.
BRICS expansion and central bank gold accumulation remain underappreciated forces. While U.S. financial advisors under 40 may confuse BRICS with the housing market, emerging nations are quietly building an alternative economic system. The dollar's supremacy is being challenged not with confrontation, but with strategic patience. Trump's bluster may energize a base, but on the global chessboard, subtle moves often win. As BRICS adds members and gold reserves swell, traditional stock and bond strategies look increasingly fragile. Investors who understand these deeper shifts are repositioning accordingly. Precious metals aren't just a trade, they're a statement on where global power is heading.
It's probably the most misunderstood what is transpiring. I say this often and I'll say it again. I think one of the happiest people in the world right now, who's ever the director of new membership for the BRICS, because everything that's playing out in their arguments why you should join the BRICS since Trump has taken presidency points more and more. Yeah, they weren't household names that joined, but we saw several more countries join. We also, I talked with Andy Schectman of Miles Franklin today. He brought up so many excellent points on what's developing behind the scenes, and China can wait out Trump, and meanwhile it's maneuvering and doing certain things. And I think it's going to come back to bite them. And again, remember, the formation of the BRICS, believing why these central banks were acquiring so much gold, and by the way, they're continuing nonstop, was the reason why I got out of stocks and bonds and bought gold for capital appreciation, and that worked out fine. I just think, I tell this story. It wasn't too long ago, a couple months ago, when I was asked to speak to a brokerage group that my friend owns, and I think every financial advisor in that room was under 40 years old, and I'm sitting at the table, and they don't know yet that I'm the speaker, and my friend is about to introduce the speaker, and he says, our next speaker is also going to talk about the BRICS, and one of the financial advisors next to me leaned over to the other guy, is he going to talk about the housing industry? I mean, I don't think everybody's that way, but I don't think there's a lot of knowledge in the financial service industry understanding what the BRICS are and what impacts it's going to have, not just geopolitically, but economically. And therefore, again, I'm a big believer in, I think they've had another great year. They're smart enough not to get into a war of words. You cannot beat Trump in a war of words. The guy doesn't care what you say, who says it. He's going to say, he's going to be as he can get very nasty, quite frankly, at times. And if you turn on him or don't longer support him, I mean, that's it. And of course, he said he's going to break the kneecaps and all this other stuff, but they're moving forward. And I think again, that's another one of the many bullish reasons for the gold market to work its way higher.